All right. It is Sunday, June 8th, 2025. What a week. Do you guys remember what happened last week, the last few days? Woo. It's crazy because I think a lot of it has to do with just the fact we have access to so much information at our fingertips. We're following major news events across the world in almost real time. In 2025, I follow a couple of accounts on X who post historical pictures, photos, and I was looking at photos from the US in the 1960s, and just it seemed like such a simpler time. Just looking at those photos, the world was a simpler place in 1966 or 1969. But then I remember history, and maybe it wasn't so much simpler. It was a decade of upheaval, all the assassinations that occurred in the 60s, JFK, Martin Luther King, Robert F. Kennedy, Malcolm X, and so on, right? There was a lot of upheaval, Vietnam War, civil rights movement. It wasn't, maybe it's just an illusion that that was a simpler time. I don't know. Tell me what you think in the comments. Is the world more complicated today or less complicated than it was in 1969? Anyway, yeah, crazy week. Obviously, I think everybody knows what happened on Twitter between the president and the wealthiest man in the world. What a crazy! You can't make this stuff up. Like that's ever since 2020. It feels like there was a break in the matrix in 2020, and like prior to 2020, it didn't seem like completely unforeseen things happened that often. Maybe I'm wrong about that, but since 2020, it seems like weekly, just stuff you couldn't make up, stuff you couldn't possibly write in a fiction novel keeps happening. Anyway, let's get to markets. Um, as always, if you enjoyed my video, if you enjoy my content, if you like this video, please hit the like button, subscribe to the YouTube channel, subscribe to Goldfinger Capital on Substack, share this on social media, share it with your friends. I know sharing is like a really hard thing to do in 2025, but I appreciate it. I appreciate it greatly. And I appreciate your attention and your time very much. Just a few things to draw your attention to on my Substack. Talon Metals. Check this article out. This is a free one. Also, this blog on the $16 trillion race to mine the ocean. Check that out. And good interview with Sitka Gold, Mike Berkey. They're drilling right now in the Yukon. And then the charts of the week, right? The charts of the week. So, what are the charts of the week? Well, platinum breakout. Remember this a few weeks ago? Back in May, I wrote about platinum. Well, lo and behold, look what's happened the last couple of weeks, right? When I wrote about it, platinum was under 1,000, and now we're almost at 1,200. Wow. Sometimes I get it right, guys. Silver breakout. And notice how silver traded last week relative to how gold traded. This is like the silver bug's wet dream, right? The scenario they've dreamed about. The gold silver ratio dropping and silver emerging as the outperformer. Well, it's happening. Neo performance, materials, Neo on the TSX. This is a rare earth play. I wrote about it a little bit, but it had a great week and they announced a stock buyback. So the company thinks their equity is an attractive investment for their cash, right? They have a lot of cash, actually, 77 million in cash, a very strong balance sheet. So that's one to watch. The rare earth thing doesn't look like it's being solved anytime soon. There's a crisis there on the rare earth side of things, and Neo is one of the solutions to it, I believe. Talon Metals, we'll talk about that towards the end of the video. I posted the chart. I talked about it a little bit. Yeah, and then the Albemarle trade setup to put on your radar. This is 16.1% short interest, and maybe the lithium bear market is about to come to an end. I don't know. So, sometimes I'm ahead of the curve on these things, and just starting to get that feeling in my bones, like maybe just maybe, this thing is ready to turn. Okay. I don't know. I'm not 100% sure yet, but I'm starting to get that feeling. So that's something to put on your radar. Anyway, the main thing is this post, which I wrote yesterday. I got thinking about the late 70s, and I kept looking at the chart, comparing that bull market to today. And I said, you know what? I got to write about this because I have a couple interesting stories about this passed down from my father. God bless him. But I think the main crux of it is this chart, right? So I'm showing you some of the main events and the main drivers during this 1977 to January 1980 gold bull market. Yeah, gold was in a bull market throughout all of the 70s in theory, but it was really 1977 to January 1980. That was the meat of it, right? Like, it was volatile throughout the decade. It had ups and downs. And in mid 1977, it was still $137 an ounce. You see that, June 1977, it was still only at $137 an ounce. Well, it went to $850 in January 1980. And I think there was even some futures contracts that traded above 900, although that's not in the chart, but futures are a little bit different. Yeah, and so why did this bull market happen? Well, I go into it, I go through the timeline, the key events that occurred, but basically it was a time of high and rising inflation and geopolitical turmoil. Also, the high inflation and the geopolitical turmoil resulted in weak consumer confidence. And just the fact that the economy wasn't doing great resulted in a falling dollar. What does that remind you of? What does that remind you of? Kind of like today in some ways, right? And also, the Federal Reserve made what in hindsight was a policy mistake around 1976, where they actually cut interest rates, eased policy, and then inflation rocketed 77, 78, 79, right? And there was a lot of change of the Fed chairman, right? Like, there were 3 heads of the Fed in the late 70s. So that's a lot of turnover. Like, we're used to having a Fed head for 5 to 10 years or even 15 years, not 3 in 4 years, right? So, yeah, it was a tumultuous time. The late 70s was a tumultuous period in all ways, and gold became a safe haven asset, right? People flock to hard assets and sound money, and gold is that, right? So there's some parallels to today. Obviously, it's not the same. Inflation's not 13%. Iran doesn't have hostages. At least I don't think they do. Soviets aren't invading Afghanistan, but they invaded Ukraine. I mean, the Russians. Same, right? It's pretty much the same thing for our intents and purposes, right? There's a lot of parallels, guys. It's not the same, it doesn't repeat exactly, but there's a lot of rhyming going on right now relative to the late 70s. So that's why I wrote this article. I found it interesting. And what is Trump doing with the Fed? What's going on? There's headlines that he's about to announce a new Fed chair. Does that mean he's going to replace Powell this year? Or does that mean he's just making it clear who the next Fed chair is going to be 1 year from now? It's very strange. And this behavior from a president that's undercutting confidence in the Fed chairman is very unpresidential and very negative for market confidence. I thought he was going to cool it on the Fed stuff. He met with Powell, and now he's right back at it. He just can't help himself. I don't know. This seems dangerous to me. I know stocks are just in la la land, and they don't care about Trump and Musk spats on X, or what China is saying about Taiwan, or what Israel is about to maybe do to Iran. They're just, the market's in a la la land. I get it. Okay. But this is concerning, folks. Like, you do not mess around with the Federal Reserve like this. I'm sorry. I think it's very dangerous and unpredictable how this plays out. Anyway, please check this out. This is one of the favorite articles I think I've ever written, and there's probably more for me to expand upon this in the future. Yeah, so late 1970s, deja vu. I feel like it's deja vu to 1979. Equities. Again, I don't have a strong feel for this. I've been in the melt up camp, don't fight the uptrend camp for the last 5-6 weeks. This rally in my mind is getting a little long in the tooth here. Actually, it's getting very long in the tooth, but I'm not like ready to just short this and bet against it. You know, it's just one of those things where I don't feel strong here. I don't feel strongly here about anything. I feel like this is just a pass. Let's get more information. Let's wait for a better setup. But chasing equities here, I don't think that's a great bet. But then I look at this IWM chart. I'm like, small cap melt up. We got the Russell rebalancing at the end of the month. June is often a pretty good month for small caps. I don't know, something to do with the rebalancing, seasonality. And we've got technicals firing here saying this is a buy. So again, I don't feel too strong about it. I mean, look to the left on the chart. IWM is going to hit former support very soon, maybe 2, 3, 4% above current levels. Again, I can read the chart and say, hey, this looks like a buy, but a lot of other things tell me to just wait and sit on my hands here, right? So I just don't feel strongly about anything. And sometimes you just have to say, you know, I don't have a trade here. I don't have a market call, and I'm willing to wait for more information. That's sort of where I'm at now. If you go back on my YouTube a couple weeks ago, I made a weekly video. It was right around here during this consolidation, and I made kind of a bullish case for Tesla. Well, that worked for about 3 days, 3 or 4 days, and then what the hell happened last week? Strong opinions, weekly held. Hopefully, if you were long, you took some profits there on that 5-6% spike. But whatever happened last week and whatever is going on with Mr. Musk is very strange. I haven't heard a whole lot about the robotaxi rollout in the last week. Is that still happening in June like it was promised? This is just messy. And the leadership of this company is very messy and clearly unfocused. So just sort of, again, pass on Tesla here. Not bearish, not bullish, just sort of in a pass mode. I don't think it's a smart idea to make enemies with the most powerful man in the world, especially when you donated tons of money to Republican causes and helped him to get elected. It doesn't reflect well upon you, right? Okay, so gold. You know, we had a down day on Thursday and Friday after briefly trading back above 3,400. Some miners, some big gold producers got hit pretty good on Thursday and Friday. I just say par for the course. This is still an uptrend. You got to look at the calendar. We're in June now. June is often not a great month for gold. Usually, gold starts to pick up again and move back into an uptrend after the 4th of July, right? So that means we've got about another month of just seasonal messiness and maybe even seasonal weakness. From my perspective, this April high at 3,500 was sort of an emotional climax. It would be completely healthy to go back into the trading range between, let's say, 31 and 35 or 31 and 34 for the next 3 to 4 weeks. And then, I don't know, a la 1979, a month or two from now, maybe that will be the real power move higher, where I don't know if it'll be a double like we saw in gold at the end of 1979, but we could certainly see a move above 4,000. Crazy talk, $4,000 gold. I think it's very possible this year, but patience is a virtue, and we cannot expect the instant gratification like it's gonna go there, you know, next week, right? So consolidation, sideways trading is great. Gold getting its name out of the newspapers, keeping its name out of the newspapers, fantastic. And here's the seasonality. This is just going back 20 years. You see June, basically one of the weakest months of the year over the last 20 years, actually the second weakest. But we just finished May, which is also usually not a great month either, and gold did pretty well in May. Summer, so as we get into the next couple of months, especially August is usually a very good month. I'm not sure why this is only 53%, but my experience is August is usually a very strong month for gold and gold stock. So it's June. It's June. Just yeah, it's fine for gold to consolidate in June. So the miners. So I know there's going to be a lot of chartists on Twitter, X, who are going to say that's a failed breakout. It's confirmed lower short gold miners. Yeah, AEM, this is a potential double top, and EM, potential double top, right? So like the big gold producers, yeah, Thursday and Friday kind of put in a bearish candlestick pattern. No question about it. However, I think we have to make a few points. Would it be such a bad thing if the GDX pulled back to 50 or even 49? No, it would still be in an uptrend. And as far as the double tops go, like in AEM, like again, if AEM comes back into like 112, or 113, everybody can see the double top then. One of the key characteristics of bull markets are failed bearish chart patterns, right? So actually the double top is great if you're bullish. You should be happy to see it because now all the Captain Obvious people will see it and get scared out or maybe even go short. And then 2 weeks, 3 weeks from now, as we get through June, the uptrend will resume and price will break out through the double top, forcing all the shorts to cover and to go long, right? That's how bull markets work. So one of the key characteristics of a bull market are failed bearish chart patterns. You get bearish chart patterns and everybody can see them and say, oh, the bull market's over, but they don't stick. They fail and price makes new highs. That is one of the absolute key characteristics. Vice versa, bear markets, one of the key characteristics of bear markets are failed bullish patterns, right? You get these great bullish setups, looks like a breakout, and then it fails the very next day and price sinks to new lows, right? So the trend, well-known adage, the trend is your friend. But it's June. It's June. Let them consolidate, pull back. Let sentiment get a little more negative. It's June, guys. No big deal. By the way, Agnico, free cash flow last quarter, $594 million. Newmont, free cash flow last quarter, $1.2 billion. What has the gold price done in April, May, and now we're in June? So we had record free cash flow in Q1. Previous to that, we had record free cash flow in Q4 2024. We're setting up for another record free cash flow quarter for the gold producers in Q2. And where's that money going to go? With Agnico and Newmont, their balance sheets are literally overflowing with cash at this point. The average realized gold selling price in Q2 will make another new record unless gold crashes $1,000 in the next 3 weeks. So their average selling price is going to be well above $3,000 an ounce in Q2. What are they going to do with all that money? Well, look at what the market is starting to do. We saw those bearish patterns in Agnico and Newmont, the two biggest guys. Look at Wesdome. It was it was up on Friday with gold being down. So this is a mid-tier gold producer making new all-time highs. So money is flowing down the food chain into the mid-tiers and the juniors, okay? This is Artemis Gold. They are about to start production in BC at the Blackwater mine, okay? So this is literally in the construction phase, but they're at the very end of it. Look at the volume. Look at the price here. Is this company about to be bought? This is a 5 billion Canadian market cap. Who's buying this company at a 5 billion Canadian market cap? I don't know. Who could buy it? Newmont or Agnico or Barrick. There's like 3 companies in the whole world that could potentially buy this. I don't know. the price action is phenomenal. And the fact that it was up again on huge volume on Friday while gold was down is just an incredible sign of strength. So we're seeing capital funds flow down the market cap food chain in the precious metals mining sector. This is a great sign because this, well, in a sense, it means we're getting farther along in the bull market. Maybe we're not in the second or third inning. Maybe now we're in the fourth or fifth inning. Okay, fine. But if you're a junior gold investor, this is your sweet spot. We're getting clear signs of it now. And then silver. So on Goldfinger Capital, one of the charts of the week was a silver breakout, which we saw. Look at these silver stocks, AG, Core Mining, CDE, VZLA. These are incredible. Incredible. Look at these moves. So when silver is leading gold, that is usually the time in the bull market cycle where the miners perform the best. And so we are in that cycle, and we're that part of the cycle, and we're seeing it in the performance. I mean, core mining, this is, you could argue this is not even a silver producer. Yeah, obviously they do produce silver, but most of their economic value comes from gold. But look at the performance. Look at this. This is nearly a double since early May. These kind of gains aren't common. Okay, this is phenomenal. But then, like with core, we could like pull this out to a 20-year to put it into perspective. Yeah, there's been a dilution. There were some poor acquisitions back in the day here. Look at the range this thing is traded in, but relative to where it's been, there could certainly be some more upside here. Okay, just pointing that out. Where are we here? Okay, and now the final topic. And by the way, this is not me inviting anybody to chase a stock like VZLA after this kind of a move. I identified this, called it out multiple times in May as the breakout was happening in real time. That was the time for traders to get long. Now this is a little bit longer in the tooth. And like I said earlier, we're in June. So some consolidation, some pullback should totally, you should be prepared for that. Okay, it's basically par for the course, honestly. But probably haven't seen the highs yet. Okay, if we're still in the fourth or fifth inning, which I do strongly feel we are, there's definitely more 3, 4, 5, 6 months down the road. Okay, Talon Metals. So those who have been around for a while are not a stranger to Talon Metals. Those who are new and watching my videos for the first time, this may be new to you. And if that is you, well, welcome. Thanks for watching. Talon reported one of the greatest, one of the greatest holes I've ever seen in my life last week. So this is hole 63 at the Tamarack Project in Minnesota, 34.9 combined meters, grading 57.76% copper equivalent, or 28.9%, nickel equivalent. Right, so that is extraordinary by any stretch. If you put it all together, including the section in between that was lower grade, you get a total of 47.33 meters, grading basically 43% copper equivalent. Right, so you're getting like grades in terms of nickel above 11%, in terms of copper above 11%, in terms of palladium above 6 grams per ton, in terms of platinum above 12 grams per ton, gold almost 7 grams per ton, and there's even some silver, right? I talk a lot about Talon on Goldfinger Capital. There's at least 3 recent articles about this, right? So sign up, check those out. I'm not going to go into every excruciating detail. I'm just going to point out this is a world-class drill hole that Talon put out last week, right? Now, we know what the stock did. It's been in a big uptrend. It's been breaking out. It hit 32.5 cents Thursday morning on the news. It pulled back. We've seen some consolidation. We've seen a lot of volume churning. That's normal after this strong of a rally from 10 cents to 30 cents in a month. It's normal, especially when the stock has this many shares out like Talon does, that we're going to churn, we're going to consolidate, we're going to digest this move. What's next, right? That's the question. I want to just get to the salient point here. The company said the BHEM campaign, so they're using their geophysics technology, their proprietary technology that they've perfected over many years at Tamarack to help evaluate this new zone from various orientations. The results of this program will guide the future drill program. So I want to make a point here. I don't know if they've got another drill hole down on the way to test this new zone. I don't know. My experience with junior mining companies is usually the news comes out and it's reporting to us what was current 2 weeks ago. Okay, that's my experience. I don't know if it's the case with Talon, but it could be that they've already done this BHEM campaign and they're processing it and they're ready to test it with a new drill hole. It could be. This is speculation on my part. This is not confirmed from the company. But it's key to understand the results of the BHEM campaign will guide the future drill program. These holes to drill 800 meters down with core drilling is a $250,000 hole. In Minnesota, in the US, even if you own your own drill rigs, just assume it's a $250,000 hole, $250,000 investment to drill one hole. So it makes sense that they want to really optimize their targeting and not just guess, right? And these ore bodies, right? I just want you to understand, like, the ore body that they're targeting is extraordinarily high grade. We know it contains a lot of metal, very rich in metal-bearing sulfides, right? The grades are above 10% nickel, above 10% copper, over 10 grams per ton platinum, et cetera, right? It's full of metal. But the ore body might not be that large, right? The tonnage could still be in the millions of tons, but it might be 75 meters wide, right? It might be 50 meters thick, but it might extend out horizontally for hundreds of meters. We don't know, right? But it's possible that if they don't get their targeting just right as they're drilling down 700-800 meters, that they could miss this 70 meter wide or 50 meter wide super high grade massive sulfide pool, this trap, this concentration that's occurring down there at depth. They could easily miss it if they don't tune in, fine tune their BHEM targeting just right. So that's why they're taking their time, multiple loops, to evaluate it from various orientations. This is smart, and these guys know what they're doing. So investors who might be impatient, I want to see the next drill hole. No, that's the wrong thinking. If you really care about this company and you're a longer term shareholder that wants to actually make money, you want them to do this BHEM campaign right and do it thoroughly. So the next step out holes, the next holes 800 meters deep to test this new zone, hit, not miss, right? It's $250,000 a hole, but it's also time. It might be 2, 3, 4 weeks to do all the drilling, log the core, and send it off to the lab, right? So it's time and money. You want to be efficient with your time and money, especially in the junior mining sector. So what are we targeting? Well, they show us the pierce points they have into the zone, but they don't give us a real idea of how it might look. But if we look at the Bitterroot presentation, BTT on the TSX-V, I'm a shareholder of both companies, Talon and Bitterroot. If we go to the BTT presentation, they're giving us some examples of how these form, right? The nickel-copper rich sulfide droplets are denser than the host magma, and they settle and accumulate in traps, forming high-grade nickel-copper massive sulfide deposits. So you see the red, boom, there's your traps. There's your traps. So literally, Talon just found one of these red traps. How big is it? How laterally extensive is it? We don't know, but we know this is an area with a lack of drilling, so it could be laterally extensive. Examples, Eagle East deposit in Michigan. This is an actual real ore body, an actual mine. The only nickel mine in the US right now is this one, run by LUN, which is Lundin Mining. This is the analog for what Talon has just tapped into with 2 drill intercepts at Tamarack. This is the exact analog. And Bitterroot, They have an exploration stage project in Michigan, literally next door to one of Talon's projects. Yeah, so in the case of BTT, their LM project in the upper peninsula of Michigan is a similar model to Tamarack and Eagle East. It's conduit-hosted massive sulphide deposits. BTT at LM drilled in 2021, 2022, and you can see the green outline here. Do you see these lines? This is the interpreted conduit at LM, plunging down to depth. You can see it's fat up here, and then it's appearing to narrow at depth. So with Bitterroot's drilling, they only drilled 300 meters deep. See this hole, as soon as they get past the green, they're out of the conduit. As soon as they get past the green, they're out of the conduit. And you can see these stars. So this is where they hit sulphides, semi-massive, massive, clasts, blebs, and they have some core picks, right? So holes 2107 and 2114 were the most notable ones where they hit some pretty high tenor sulfides. This one grades 7.13% nickel, 7.91% copper. It's 8 centimeters. It's just a little, rip up class. So basically, the interpretation is these massive sulfides, semi-massive sulfides that they drilled into here were ripped up from a source at depth. So magma that was transported upward from depth and then they couldn't get past this point in the conduit, right? So they know they have a vector on where to test at depth. They probably need to drill 500 to 600 meters deep to actually test the potential trap, the pool of hopefully massive sulfides at depth. And what makes this project even more interesting is that Talon has the ground next door at Roland. You can see this area where Talon has been working at Roland. Well, here's where BTT drilled back in 2021, 2022. And you can see we're talking about like 200 meters away from the property boundary with Roland. So this is Talon and this is BTT, right? And this is obviously they are looking for the same system. And so where is it? It's probably in this area. Whose ground is it on, right? And so that's what is interesting and needs to be tested further. I think there's a lot of evidence supporting testing this area, the conduit plunge all the way down to the property boundary. And again, these ore bodies, like, this could be 300 meters laterally, 100 meters vertically, and then another 50 to 100 meters, horizontally. You don't know until you drill it, but that's a pretty standard massive sulfide trap, right? Like that's the pretty standard scale for what one of these traps might look like at depth, right? And Talon is going to have to figure out the scale of theirs, right? And so that's why they're doing this extensive BHEM campaign using multiple loops at various orientations to really hone in on this thing and give them a better idea of where to drill next. So that's it for me this week. Thanks for tuning in. Again, if you enjoyed this, please hit the like and subscribe button and have a powerful trading week.